the more flexible you can be, the easier it becomes.
We're off to the Central London Property Meet. We've got a panel of funding people from lenders and brokers talking about the current market, talking about how to get funding, what to look for, how to position your case, how to make yourself fundable. We're going to meet lots of other property investors, developers, estate agents, surveyors, planning consultants, architects. I can't wait to share this with you. Do you suffer from procrastination? I've got something very exciting that I want to work on, but I've got something more urgent that I don't enjoy as much that I've got to work on as well. Tasks are splits for a network that's competing for our business, and the other is a presentation that I've got to put into a PowerPoint presentation. Just not as good with all the arty stuff. I much prefer a spreadsheet. Even though we're on a bus, it's not all about the glitz and the glamour. And property, honestly, ask anyone that's doing it full time, especially the SMEs, it rarely is lots of glitz and glamour. But I absolutely love what I do. I really do.
I thought you were selling balloons there.
Yeah, exactly.
Well, come and give you a favour.
How was your meal?
Meal was very nice. I went for the old chicken tikka masala.
So you've flown in from Northern Ireland to be at this event.
I'm here for 2 days. Haven't been here for a few months, so I wanted to get here again. But back-to-back meetings during the day, networking tonight, and then again meetings tomorrow before flying home again.
When you come to these sorts of events, who is it that you like to bump into? Is it investors? Is it developers? Is it planning consultants, estate agents?
That's a really good question. It's probably different people at different times, Sam.
Yeah.
You know, it depends maybe where the business is at. Sometimes it's great just to come with no preconceived agendas and just
Yeah.
to see who you meet. I think that can be good. Other times, yes, you're looking to find investors or looking to find developers, or very often I've been talking to someone on Zoom for a number of months, and then we'll find we're both coming to the event, so it's going to be the first time having a face-to-face with someone.
I know that you're in the funding side, similar to me, and you've been helping a lot of people with equity over the last few years, which is the trickiest part of the capital stack. This has been a sticky period in the market the last few years, high interest rates, high inflation. You know, how have you found it?
Yeah, I think the last 6-7 months has been pretty challenging. I think whenever you have any uncertainty in the market, it does create opportunity in some sectors, but when you're in the funding side, uncertainty isn't great. Banks change their lending criteria. That maybe makes some of the development opportunities not stack up, and investors are maybe just being a bit cautious. Just want to see what's happening with interest rates. So where someone was doing a 100k ticket normally, they might only do a 50k ticket now.
Still activity, but it's just suppressed a little bit.
Not at the level it was at.
Yeah.
And that means then it's harder to get deals funded.
Time and you have the conversation.
This event has been here in this venue for the last 7 years, but rather than me take up any more of your time, Sam, or yourselves, can I just ask you to give Sam a warm welcome?
Hello everybody and welcome to the Central London Property Meet.
A self-build, end of terrace new build, concept design on the left-hand side, beautiful mock Victorian property on the right-hand side, very highly thermally efficient, beautiful 4-bedroom house in southwest London. Developments like these, knock-down bungalows, rebuild 4-bed flats. This was a large development in Croydon, which we added about £1 million to the bottom line for our developer client. Took the scheme from effectively 6 units on site to a 16-unit park conversion, and then 8 new builds in between the row of terraces there as well. So huge amounts of value added through the permitted development process and also the full planning process.
Good to be here. You know, the auction market's changed. COVID did that to us. Types of things that you see in the auction rooms, well, it's certainly auction has increased. The figures are now that about 4% of everything sold in the UK is through auction. Now 4% doesn't sound a lot, but 10 years ago it was only 1% of the market. It's definitely a growing trend. I've seen fees you've got to pay £6,000, £7,000 as you know to buy your 28-day lockout. If you don't complete, guess what? You don't get it back.
Security for your loans. So obviously we've just said it earlier on that it's really easy to get the money out there, very difficult to get it back, and you have security packages, security requirements. So Catty, what sort of security package do you expect to see from the borrowers in terms of charges and PGs and whatnot?
Yeah, so the security packages is all relevant to the risk we're taking as well. So it's all dependent on the leverage. We tend to always ask for a personal guarantee of at least 25% of the total gross loan amount. So that's typical. In certain circumstances, we have waived the PG requirement if the loan is below 60% loan to GDV. And if it's a very high net worth borrower, for example, or if it's an overseas borrower, then they can't actually provide a PG anyway. So I have a client in Malaysia, for example, very high net worth family. They can't give a PG because all their assets are in Malaysia.
It's pointless having it. Yeah.
So therefore, I've structured that deal below 60% in order for us to be able to do that. But at the very least, we do require 25% personal guarantee for higher leverage, for higher gearing loans. If it's above 70%, we take extra security. So usually by way of a second charge over another asset or over shares of the business. So we somehow try and leverage the deal accordingly.
So first charge secure over the asset. Personal guarantees if applicable, but you're kind of flexible on that side of things depending on
It's all about the risk. The higher the risk, the more security.
Of course. Yeah. Any advances on 25% PGs?
Well, lower or higher?
Either lower or higher. We've got the market here.
There is something coming out. It's the first company I've ever heard of that do this. So it's worth looking. I'll be putting some posts up about this on LinkedIn for anyone that follows me. And if you don't, go follow me, James Fudge. A shameless plug. There's a company coming out that is an insurance company that is insuring people's PGs. You probably know about these guys already. There's an insured PG. Now, we are super excited about this at Catalyst because we think it could fundamentally change the way that we lend. And I won't get into a load of detail, but yeah, there is a company coming out that will insure your PG up to 100% as well. So if your coverage of 100%, it is there. It's not the cheapest thing in the world, but if you've got a lot of PGs out and you're a little bit nervous about your PG position, it's actually, potentially quite exciting.
But if I was to ask you, Lolita, is it better for borrowers to go directly to you for their funding, or would you advise them to go via a broker?
I think somebody touched upon it earlier, and I think it is important to get some whole of the market advice, and I think that's what brokers do. They're able to scour the market, whether it be for a long-term financial solution such as a buy-to-let, or whether it be a short-term or a refurb product. There are so many lenders out there with different nuances, and again, we touched upon what's important to you. Is it rate? Is it speed? Is it confidence on being able to get delivered the positive outcome that you set out? Or is it a case of, I haven't got time to provide you everything that a bank would actually want? Is there a bit of flexibility on what and how you will actually ask for as part of that application process? And I think from a personal point of view, and certainly GBs, we're old school. We like the old bank managers. You'll deal with a relationship manager, and if that be me, I'm your cradle to grave person, and what that does for you is that gives you a more of a consistent experience. It makes us more efficient. So yes, we deal with intermediaries who can certainly support borrowers, and investors. But likewise, with good intermediaries, we also deal directly with investors. And I think ourselves, Sam, I've done several transactions where at early doors we've, as a lender, have created a three-way dialogue, as it were, with all the relevant stakeholders. So that could be you, the investor, and your intermediary, at making sure that we know what good looks like for all of us, let's say. So I think it's beneficial, definitely, to have an intermediary. Yeah.
If any of the audience wanted to come to you directly, what would be the benefits?
I'm actually with Alita here. I think actually in the current environment, in the current market, given everything that's going on, actually using an intermediary is a very positive thing, because it's not just about getting the bridge loan or the development loan. It's actually about the exit. And the exit, you know, it's all very well lending money, as we talked about earlier. It's all about lending money. It's fine. I can lend money all day long. But what's much more important to me is the exit. And I think there are lenders out there, not on this panel for sure, but there are lenders on this panel that are very happy to see people fail at the end of the day. We certainly, I know James, for example, I know that they are not lenders. For example, I don't know all the other lenders on the panel, but people don't want I don't want people to fail, and it just causes me a lot of hassle, a lot of things. If I've got a broker, an intermediary, an advisor who is advising the client, it's a much better example. Do we have direct clients? Of course we do. You know, it happens. You know, people will find us. They find us for lots of different reasons. Sure. But I much prefer having an intermediary there as the person who's really advising the client. We don't provide advice. That's clear. We're not regulated. We're not able to provide advice, and I'm not going to start doing it.
Why is it that you picked the super prime end of the market when it seems like we've got an affordable housing crisis that everyone's trying to solve, social housing, everyone's fitting into HMOs? Why did you think it was a good market to be in?
Sure, good question. So Capital Rise is actually built by developers who are super prime developers.
Right, makes sense.
So that hence the appetite to lend. It's not a market for everyone. It's very, very niche. So our co-founders own Finchatton, which is a super prime developer. They've built developments such as 20 Grosvenor. They're on the Whiteley's development at the moment, so that will be finished next year, where they're selling units at around £5,000-6,000 a square foot. So that's the level they operate in, hence their appetite in prime real estate. So they founded Capital Rise in 2016, just based on their own experience in raising capital for prime property and how difficult it was with the high street banks and the high street banks retrenching and not feeling comfortable with these kind of assets. So predominantly that's so we don't just lend in super prime, we're also branching out at the moment, so we're trying to also lend on non-prime assets where we're borrower led. So if it's a very, very good borrower in SME developers that are in the home counties, we would also look at those regions.
Which makes sense. I think when you're an investor, you have to invest. Like the biggest risk is not knowing what you're doing. So if you've got a development-backed lender that knows that marketplace, then they can mitigate a lot of the risk and a lot of the lending that they're putting out because they understand those markets. So that makes
But it's also
sense.
worth mentioning that the prime market has been extremely resilient in the past few years. So it's also with the kind of houses that we are lending against, they don't need mortgages. So we haven't been affected by the downturn so much.
And talking about mortgages, Ben touched upon it earlier, the green mortgages. Chaz, do you get a lot of demand for, or do you get a lot of people saying, hey, you know, I've got this really great either HMO or new build or conversion, and I've got I want it to have all the eco credentials. Can you give me some green mortgage products?
Good question, Sam. Interestingly, no. I think a lot of investors were holding off on the EPC improvements or any of the other ESG stuff. So where it's happened, it's just a natural consequence of a refurb, as opposed to an intentional improvement to the eco. So yeah, I've not had many where we've gone and given them a green rate. However, having said that, a lot of these green mortgages, they're not that much cheaper than the normal. They're maybe 0.5%, or the fee is a little bit less, so the benefits aren't that great anyway.
Are any of you ESG or green conscious as lenders?
I'm going to be a little bit controversial because
Please
the ESG thing, I'm sure Paul will probably probably back me up on this. There's something in our industry now which we're calling greenwashing, and that is where lenders have created products that look like they are supporting, environmental positives in construction. Whereas the reality, what they've actually done is they've kept their interest rates the same, and then they've just bumped up the rest of them to make a little bit more profit. So there's a real interesting market at the moment around ESG and green products. Don't necessarily be fooled by the wrapper, because it's not always an ESG product. It's just been repackaged, right? It's a big buzzword in the industry at the moment. 100% we have to move towards more sustainable ways of developing alternative building methods. I'm completely agree with, especially if you look at our friends in Europe and in the US in particular. They have a lot more efficient ways of building, and yes, we can learn a huge amount from that. But in terms of the finance world, we've looked at the kind of ESG positives. We've looked at a lot of other competitors in the market, and actually we haven't yet found a product that we would really say is an ESG product. We would say it's just been repackaged.
Quickly add to that, I completely agree, James. I think, people like the people in this room, they already know that they have to meet certain environmental standards. I personally,
enough, right?
Exactly, they already have to, they buy a wreck, they have to bring it up to standard anyway. I think, from a personal point of view, I'm disappointed that they haven't, aren't going to implement those ESG regulations next year, because that would put the pressure on people to get it done. But exactly as you say, the ESG is not the fundamental thing in property development.
Yeah.
What you need to do is buy property. Much more important is to be able to get social housing done.
Yeah, 100%.
Environmental stuff, much more important to house people than to worry about whether it's an E, a D, a C, or whatever.
Yeah, we got enough issues going on in the moment.
It is a birthday celebration, and a birthday celebration will not be complete without cake.
Shaz loves cake.
So there will be cake available at the back, and I just also want to say, if there's anyone who's on any of that diet or anything else, and they need their cake eaten for them, I'm happy to do that for you.
That's all about, man. This is it. This is it. That's the best pizza in London. Thank you, guys.